You for our Hump Day Holla Plus One. We know it's Thursday. Believe me, Andrew and I know it's not Hump Day per se, but we're here to bring you another episode of Mortgage DNA. We chose to be with you today just so we could give a little bit of insight. Not that we have any control over it, Andrew, with the Fed speaking, but then to kind of piggyback off of, we're doing a series right now of, how to make an offer. Now you're under contract. Next week, we're going to take you through. Now you're clear to close. What happens next? So we really want you to be able to go find these videos and understand the process, right? We talk about the challenges of purchasing a home, but the process doesn't have to be a challenge if you're working with the right folks, right, Andrew?
That's the key.
So, what did you pick up on, if anything, anything from your end that you saw with the Fed speaking yesterday? Um, anything that caught you by surprise, so to speak?
No, nothing caught me by surprise, but nothing will. I mean, it's the world's going to keep turning, right?
Yeah, I mean, the sun will come up, the doors
Right.
open to the office, and it's business as usual. And I think there's always a lot of hesitation, a lot of what's going to happen, and I guess the term dovish is what they were yesterday, kind of not very like, hey, we're going to do this. Now all of a sudden they're backing off. They stuck to a 3 rate cuts.
Yeah.
Right, by the end of the
Right.
year. So, but what I thought was kind of unique is talking about unemployment. They keep bringing unemployment. I know on my show, Mortgage Gumbo, we've talked about, to me, that's the canary in the coal mine, is unemployment, because at the end of the day, last thing they want on their hands is a bunch of unemployed people going to the ballot box, right? So, they kind of left it open with the unemployment. Well, if this gets a little too crazy, then maybe we'll lower some things and all that. But, who knows what to believe in this day and age, to be 100% honest with you.
I think the unemployment,
we're at their mercy.
I think the unemployment stat equaling inflation happening or not happening, I think that's old rhetoric. Yeah. I think it needs to get thrown out, because we're proving that. I don't care if the economy's strong, right? People are gonna. We're just robust. I think this is a different time in the U.S. history, right?
Yeah.
In general. So I think you can't look at unemployment as a factor if we're winning the war on inflation. Just don't. I don't think it means anything.
It doesn't mean anything. And that is an excellent point. And it's kind of hard to say, well, let's look at unemployment when, guess what? They don't even count people after 4 weeks anyway. Right. So so really, the measurables, I think, are just off, and it just really, to me, does not make a lot of sense on what this stuff is. And they come out and read out their robotic statements, then they take questions, and then you kind of see what the market does from there. And there was a little bit of a positive reaction yesterday after the fact. Yeah. So we'll see, and then all of a sudden it seems like then tomorrow. Now the next Fed meeting's not till May. So you're now going to have March and April's data before they have their May meeting. Right. So I think possibly, depending on how things go, they may be looking at something then sooner rather than later, but we shall see. So with that being said, that doesn't mean stick on a sideline, because the one thing you're not seeing is inventory and stuff like that go down by any
So
measure.
Regardless of what the Fed say, home prices are going to still go up.
Yeah.
So it's better to get on that ride and
start building your wealth.
Get it? Yes.
Start building your wealth, right, Andrew?
Absolutely.
That's what we talk about. So last week, we talked about how to make that offer, and we gave some tips on, what's some ways to win, escalation clauses, hey, paying that seller fee, all those kind of fun things that we rolled out last week. I think what we want to share with the audience this week is, all right, so now, great. You took our advice. You got that offer. Now you're under contract.
Right.
So now what?
Now what?
Expect, right?
Right.
So let's kind of run through, Andrew, on your end, like for our audience to sort of understand, all right, I got the purchase agreement. I won. Okay. I'm buying a house. Now what do I do? Right. As that buyer's remorse starts to kick in and you go, Heck, I just spent 400 grand, or I
Right.
committed to, 200 grand, heck, whatever the number is. So let's kind of go through what you've got and kind of rock and roll through what our listeners can expect once they're under contract, really how the process should go to make it seamless for them.
Well, obviously, the first thing's an inspection. I mean, you could probably have one that could be a contingency that you don't have, but you're going to get one just for general knowledge. But,
Yeah.
The inspection happens first on that home, paying that home inspector to find the things that you can't see. Is this a money pit?
Yeah.
What else is going to go into it besides the down payment? How much more am I going to have to invest in this home now, immediately, or in 5 or 6 years?
And then for y'all up in Ohio and in the markets that you're in, are y'all usually on the contract, like inspection to be done within 7-10 days, something like that? Is that pretty general on y'all end?
It's probably, it's within a few days, correct? Yeah. Like 5 or less usually.
Yeah. And then you got to go get the responses and all that kind of stuff. So inspection audiences is listeners is by far most important, because that's kind of going to give you, this is again, like Andrew and I have talked about in the past, what are my outs, right? Well, if it's lipstick on a pig, you've already given that earnest money, right? So I guess the first thing we should put is, after you're under contract, you're going to bring that earnest money check to that realtor, or give your realtor whatever it is, 500, 1,000, 10,000, whatever that earnest money is. Well, now, all right, how do we get that money back if this seller or this house isn't what we thought it would be, right? So that first step is those inspections. And then for us, next thing for us is, then you're kind of doing, you call it the ROC. So kind of talk about that a little bit.
Well, release of contingency. So a lot of times when you go under contract, there might be some contingencies like the inspections, whether it's general home inspection, well, septic, whatever. The inspection comes back. Sometimes it's used as a tool to negotiate maybe seller concessions or a price reduction, or, hey, these are the things that are wrong, fix it and I'll buy your home. Right. Yeah. So that after that's released and that's signed off on, typically then I will order the appraisal. Like, I know that could say, in the contract, it needs to be ordered within X amount of time, but I'm not ordering an appraisal until I'm getting the blessing from my customer.
Absolutely. Yeah. Because that's a little bit of a bargaining chip too, right? You don't want to have the inspection, and while that's going on, then they go dump another $500, $600, $700 on an appraisal. Right. You kind of lose a little bit of bargaining power. And for us who close loans so quickly, the appraisal usually is the only thing we know in the background we're going to need is for them that house to value it what they're saying it is. So I agree there. And for us, that inspection response period, as you call it, a ROC, is where those negotiations are going on. Now, look, I've seen clients that will walk away from a house because a window is fogged. I've seen, so that's where, again, let's really be kind of real. Do you want to lose this house over a GFI outlet that maybe isn't working, right? Versus maybe asking them to put in a new attic door, right? Or something like that. I mean, I think that's where you get with your realtor and kind of ask them. Because for us, Andrew, I want to be clear. We recommend inspections. We don't require them. Right? Outside of VA. So when you're looking at that, we recommend, but we do not require. So you can ask our opinions, but it's not something we don't want to see that ending up on addendums or anything like that. Yes, that's for sure. Right?
Correct. So,
so we've ordered the appraisal now.
Order that. That takes a couple days to probably get scheduled and get done. After that, I ordered the title right away, right? So get the contract titles ordered. I think this is where, I don't know about you, but I have the customers will call and be like, hey, this title company's calling. Well, answer the phone. Respond to their email, right? Because what's the title company going to want to know? How you're holding title. Who's going to be on title? What type of title, how do you want to hold it, right? Is it a survivorship deed? Is it, tenants in common? I can't remember anything else.
Absolutely. So I think that's important. And just so you know, as the buyer, 99.9% of the time, you get to choose the title company. Just so you know, in case people are wondering, like, all right, well, how do you find that out? Do I need to have somebody? You get to choose that. And usually between the lender and your realtor, we have a team that is ready to go to rock and roll, and that way we know things get done. Don't ever really recommend giving someone a proverbial shot to do title work if it's not something they do. If it's somebody who operates in family law, do they have the ability to do it? Probably so. But let's not look at giving folks a chance or a shot when it comes to title. You want to use folks who are set up to handle that part of the business for you.
So the title, and this is where people ask, like, why do I have to have a title company? Why do they need to be involved? And I always explain, well, for the biggest reason is when we are giving the mortgage out, we want to make sure that there's no clouds on title, that we're going to be in first lien position.
Yes.
Once we give that mortgage out, but also too, title company is going to protect the customer because every single cent's going to be accounted for. They're the disinterested third party, making sure that everything's done. Also, that the buyer isn't going to be inheriting any issues down the road after we close. That's where the title insurance comes in to protect. It's another layer of protection for you.
Yeah.
Right. So we're going to be protected that we're in first lien, but maybe something happens along the way and some mechanics liens or something pops up afterwards. Well, you always go back to the title company and they're going to clear that up for the buyer.
That's right.
So that's super important.
That's a one-time, that title insurance, just so you know, that, for you, when you buy that at purchase, that owner's, that stays with you and that house for the life of the loan. So if 10 years later something pops up, you find out the people sold to you had little Johnny was incarcerated, got out and said, hey, where's my percentage of the deal or whatever it is, the title insurance company is going to handle that for you at no cost to you. So
is it for the loan, or is it for as long as they haven't transferred the deed?
Correct. That's what, right. I'm sorry. Correct. On that house, as long as they are still the owners of that home.
Right.
Yes,
right.
Correct.
But
yes.
if they would refinance or something, then they, sometimes people will buy a home, get the titles insurance, then be queued afterwards and put it into an LLC.
Yes.
That kills the insurance, right? So then they have to get it again if they're going to, have a deed on how they're holding title.
Correct.
Makes sense.
However, with a refinance, if you're not changing anything and you're just lowering your rate or getting cash, make sure you understand this as well. You're not required to get owners again. You are required to get lenders, right? Lenders title, but you're not required to get owners title. So big important stuff. We take care of that. We'll explain that to you, but that is part of the process. That's, again, us making sure that we're protecting your collateral and our money as well. In that standpoint. All right, so title, go from there, Andrew.
Homeowners insurance.
Yeah.
Dwayne, I tell people on the onset to start looking for title insurance. How many customers wait until 2 days before closing to get it?
Oh, yeah, the homeowners insurance is especially, I don't know about in your market, Andrew, but, we're taking it in the shorts down here in the Gulf South. And for us, people have sort of gotten used to the higher rates. It's the homeowners insurance that is a big deal. And we like to make sure that stuff's handled up front. We don't have to bind it until we know we're getting it clear to close and getting close. But you got to have a general idea of what those costs are going to be, because it could affect your loan type, what loan program you're in, depending on what the cost is. If it brings your ratios to a certain point, flood insurance for us down here, are you assuming the flood so it's cheaper versus the new higher quote since that FEMA 0.2 kicked in a couple years ago? So homeowners and flood is something that we encourage you right away to. You don't have to make the decision on who you're going with, but you got to at least get some quotes. And so you have an idea of what your payment's going to be, so we know what we're qualifying for. And we shouldn't be having surprises on that at all. That's for sure.
That's why you get it in the beginning and start looking. And it's important not to just look at what's the cheapest payment, but what is that insurance going to be covering for you as well, right? That's super important, I think. But homeowners insurance, flood insurance, hurricane insurance, earthquake insurance. There's different riders.
Wind and hail. Then within that homeowners insurance, you've got dwelling, you've got contents. What I would tell you there is be realistic. A lot of people think they own a lot more stuff than they really do. What you got to think about is contents is, hey, if the house burnt down, how much did I have in there that I could get back, right? But then that's where you're having conversations. And again, we can help you. I know this is a lot where coming at you with, but we can let you know, hey, replacement cost versus actual cash value. You got to be careful because there's a lot of discount insurance companies out there who are going to promise you this low. And insurance, Andrew, you're like me, I'm sure. We all think we've got enough of it, right? We don't need any additional, but until you have to use it and call
Listen, I'm
for somebody who's been
overinsured.
through Katrina down here,
Yeah.
thank goodness the insurances that I had were correct and took the time, and my agent took the time to go through it with me because it changed our life and how things were being done and keeping us from really going into the poor or broke house when you have a catastrophe.
Well, being in Ohio, we don't really have as many issues as you do, but if something ever happens to my house, I'm going to build a Taj Mahal. It's overinsured, but
yeah,
but I hope it doesn't. But yeah.
All right. So now you've gone through inspections.
Yep.
You've settled on those. We've got it appraised. Appraisal came back great, maybe even a little bit more. So you feel good. You're walking in with some equity. We've got your title quotes, your homeowners. Now we've sent you back into underwriting. Right. Okay. So the file, now we've got all our stuff. We're sending you for the clear to close. And next week, we're going to talk about now you've gotten clear to close. So we're sending you up through underwriting for the clear to close, where maybe they'll ask for an addition. Hey, we need to see, an updated pay stub. Maybe you've been looking for a couple months since we had you pre-approved. Or most importantly, and this is my point, Andrew, the underwriters, hey, the funds to close. Right. Now the rubber meets the road, right? Now we've talked about all this money and we have everything. I want you to let's dig into those funds to closing because I've seen it blow deals at the end. And there's certain things that you always need to be communicating with us during this process, right? Do not, if you're thinking about making purchases and stuff, please get with your loan officer doing that. So let's talk about that when we start talking about funds to close. Andrew, kind of take us through that a little bit.
So the biggest deal killer is going to be if all of a sudden the money that you were going to get as maybe a gift comes in the form of unsourced cash. Large cash deposits, it's going to be a deal killer. We're going to have to show where it came from. So
under your mattress does not work. By the way, they don't take a LOX under my mattress. That's so you gotta
be clear. I always explain to people like, hey, if you're gonna have cash, let us know in advance. There's certain there's
avenues
proper ways
take.
Of
there's avenues,
so that nobody gets in trouble, but that it can be used mainly in gifts and whatnot. So conventional government loans and conventional loans have two different ways of getting gifts, right? But the easiest way, let's talk about conventional. If you're going to get a gift, rather than having that money given to you, if it's wired to the title company, then the only thing we're going to need is a gift letter and then receipt from the title company, guys. So receipt, gift letter. That's it. No questions asked. If the money's wired to you and it deposits in your bank account, well, then we have to source it. So then we're going to be asking for, who did it come from? Give me that bank statement. We're going to start prying into somebody else's business that's got nothing to do with their mortgage other than giving you the gift money. And that's where family, can get a little goofy, right?
It gets a little sticky, right? When all of a sudden you want to see grandpa or dad's bank account, right? So, get with us on that because if you do that and you transfer it directly to you, like Andrew's saying, we're going to need a proof of from, which means we got to see the assets. And then to or where did it go to? And then we've got to see it coming into your account, right? Whereas if we transfer it directly, hey, boom, here it is.
Here it is. Right.
So, again, that's where your loan officer has to have an idea and able to guide you. And matter of fact, Andrew, I did that just yesterday, was getting some funds to let's just alleviate 3 or 4 steps and just have the money transfer. Here's the title company's number, call them, get the wiring instructions. And we're done. They sent over a receipt. Now we're good to go. It's, you're not caught up in, because what if you do that? And then what if your bank, has a 10-day hold is their policy and you're up against closing, right? Sure. And now all of a sudden, here's money that you've got, but you can't close because there's a 10-day hold I've seen on banks and stuff like that. So you got to be moving large deposits around is critical. And actually, it's one of the 10 commandments that we talk about all the time of
The
what
do's
not
and
to
the
do.
don'ts, right?
Yeah, the do's
But if
and
you are going to be transferring money, and sometimes you have to do that, just provide or keep the receipt of where it came from. The paper trail will always be needed.
Yeah, absolutely. Yeah, we're going to have to show that. And
Yeah.
because, again, we know our clients, but the investor and that underwriter that's making decisions don't know that that come from a casino, right? That come from that cash, come from, found it, right, under a mattress, so to speak. So
It's a Patriot Act, right? I mean, that kind of put this level of what am I looking for here? Level of questioning and to come about. So it's not our fault. It's not the bank. Nobody's being mean. It's just the level of legislation that came about.
yeah, and I'm okay with it. I get it, right? So because again, we're taking title. The last thing you want is somebody going, "I didn't give them that money."
Right.
And let me make sure I understand. Explain gift. A gift is a gift. It's not, I'm going to give you this money to help you close, but you
Right.
promise to pay me back. No. It is a gift. Just want to be clear on that.
So
Okay?
listen, you cannot use borrowed funds for down payment. Cannot do that,
Thank
guys.
you.
Not
Yes.
allowed.
Ever.
Right.
So, anything else to add there? I think, look, this is the exciting part. This is where the rubber meets the road. You're under contract. All that hard work that you've done, whether it's get your credit score in order, save your down payment, all that stuff, this is where the excitement comes in the process. We're going to guide you through that. And then, like we talked about next week, all right, hey, you're cleared to close. Now what? It doesn't stop there. There's a lot more that has to go and we're going to guide you and kind of tell you what to expect there.
And after the clear to close, the number one thing is calling your loan officer and making sure that they're coming to the housewarming party.
Absolutely. Yes.
Right?
Yes. No doubt about it.
All right. So before we go, big news on you. Your son.
Yeah.
Let's do this.
Hey, look, man. No, look, it's good stuff, man. Look, they're working hard. The team's starting to catch their groove. We've talked about, I know I talk about it a lot on my show. Team's starting to really catch their groove. They've won 5 of the last 6, so that's good stuff there. And a young team, hey, they're getting hot at the right time. But yeah, kudos to him. He was recognized in the state of Louisiana by one of the sports outlets over here as one of the players of the week and stuff like that. So
we got to vote for him, right?
So yeah, excited about that. Yeah, go search Facebook and check out, go find Dwayne Stein and go vote. It is what it is. But
hey, I voted once. Can I keep voting? Or
yeah, man, that's what's crazy. There's one girl on there that's got like 5,000 votes. It's crazy. I don't know how in the world because it's a little 2A school, so that's probably more than even in the whole town. But yeah, you can vote multiple times. But look. I just appreciate everybody always asking how he's doing. And, hey, 13 games left in his senior year now. So, y'all should be worried about me, not him, right? I'm being a little selfish. It's me that we should be worried about because I have no idea what I'm going to do after this. So
I think more podcasts are in your future.
There you go. Right. Yeah. Yep. More mortgage DNA. No doubt about it. So.
There you go.
All right. DNA Nation. Till next week, you can check us out. You know where. Google us, Andrew Makovic, Dwayne Stein, Mortgage DNA. If you like it, if you want some topics or something like that, hit us up, throw us a comment, and then we'll be more than happy to discuss that with you and give you our humble opinions and data on all that stuff that we talk about. So till next week, DNA Nation, keep it real.